Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for SafeFab.tv, and welcome to episode 5, where we are looking at real-world assets, a niche or category we thought needed some focusing, and we are doing exactly that. We are now in episode 5, the second installment of the Layer-1s most likely to benefit from this niche or this category of real-world assets. But before I jump into this episode, guys, please know that this is not meant to be financial advice. This content in this video is only meant for entertainment as well as educational purposes. The content is not for UK audiences for the sole reason that the UK authorities do deem anything crypto related to be extremely risky, and they're trying to protect your soul. You should not be watching any crypto related content. You must listen to those guys. Okay, let's come back to episode 5, where we are looking at the layer 1 most likely going to benefit from real-world asset tokenization on the blockchain and within crypto. If you remember episode 4, we are focusing on the first 4 layer 1. We focused on Ethereum, Solana, BNB chain, as well as Polygon and its Pol token. So this week we are going to kick episode 5 with Avalanche, ticker symbol AVAX, AVAX, a modern layer 1 focused on speed, subnets, now called Layer-1s, and recently institutional DeFi, and it's also big in gaming as well. Avalanche's TVL is approximately 1.2 billion or somewhere thereabouts, and it is a top 10 chain by TVL. It's known for its subnet architecture, essentially custom blockchains that can be tailored for specific use cases, or benefiting from Avalanche's consensus. Avalanche has made real-world asset tokenization a strategic focus. If you go back to the middle of 2023, the Avalanche Foundation launched Avalanche Vista, a 50 million initiative to purchase or tokenize a wide range of real-world assets on Avalanche. This fund explicitly targets assets like equity, credits, including loans, real estate, and commodities to be minted on Avalanche to showcase and bootstrap on-chain liquidity. Avalanche has attracted various crypto projects or various RWA projects. For example, you got one called Intain, which is launching a layer 1 for tokenized asset-backed securities or ABS, essentially turning pools of loans like auto loans or mortgages into tokens that can be issued and serviced on-chain. Intain's CEO noted on-chain administration simplifies workflows for issuers and investors. And looking closely at institutional subnets or layer 1s, Avalanche created dedicated institutional chains such as Spruce, an evergreen subnet where firms like T. Rowe Price, Wisdom Tree, and Vanguard experimented with tokenized asset trading in a controlled environment, and this was announced back in 2023. These subnets or layer 1s allow compliance rules like KYC and so forth at the chain level, which appeals to enterprises. For example, Wisdom Tree issued some fund tokens on an Avalanche subnet back in the day as a trial. And as for enterprise and government partnership, Avalanche partnered with Deloitte to use Avalanche for disaster relief fund tracking, not exactly RWA, but shows enterprise trust. It's also reportedly working with Intain and other fintechs to possibly host portions of the US private credit market on chain. Additionally, Avalanche joined initiatives like the Tokenized Asset Coalition alongside Golden Tree, Securitize, among many others. And this was an indication of its strong engagement with RWA facilitators. On the public side, Avalanche's DeFi ecosystem, which includes the likes of Aave, could readily integrate RWA tokens issued on its layer 1s using Avalanche's main chain as a bridge. Its consensus allows fast finality, you're talking of sub 1 second, which is beneficial for trading traditional assets. Overall, Avalanche is emerging as an institutional-friendly layer 1 for RWAs with a clear strategy to support tokenization end-to-end, and that is issuance platforms, on-chain trading venues, and investment by its foundation. Its $50 million commitment and the presence of large trade-defined names on Avalanche layer 1 or subnets suggest it could capture meaningful RWA activity, especially in areas like structured product, tokenized funds, and potentially forex exchange or foreign exchange or commodities trading network. The ability to have permissioned subnets or layer 1s means a bank could run a compliant marketplace on Avalanche tech while still tapping into liquidity from the broader Avalanche ecosystem when desired. This versatility is a plus. The AVAX token may benefit from subnet or layer 1 usage, as fees can be paid in AVAX depending on configuration from overall network growth spurred by RWA. So that was Avalanche, which I think is also going to have some strong showing when it comes to gaming. Next, let's look at Polkadot and its parachain. Got the likes of Centrifuge, for example. An ecosystem of interoperable specialized blockchains, some targeting RWAs. Polkadot itself is a layer 0 facilitating custom parachains, and it provides interoperability and shared security. While Polkadot's direct DeFi TVL is modest, certain parachains are entirely focused on real-world asset finance. Take Centrifuge, for example, and its token or coin, ticker symbol CFG, G, which is a prominent example. It's a parachain on Polkadot, but it also runs on Ethereum as tin-like app that tokenizes real-world assets like invoices, trade receivables, and real estate bridge loans. Centrifuge pools these assets and issued ERC20 tokens, drop or tin, that represents senior and junior tranches of the pool. These tokens can be used as collateral in MakerDAO. Maker is integrated multiple central pools, bringing in RWA or real-world asset collateral for DAI, its stablecoin. As of 2025, Centrifuge has facilitated over $400 million in financing to real-world businesses via DeFi, indicating real traction. Its use of a Polkadot parachain allows high throughput and custom tuning for RWAs, for example, built-in legal structure. The Polkadot ecosystem size is smaller, but it offers cross-chain integration. For example, a tokenized asset on Centrifuge's chain can easily move to Ethereum or to Akala for use in DeFi via Polkadot bridges. This flexibility could become valuable as RWA tokens might need to traverse between private chains, Polkadot, and Ethereum. What about the enterprise angle then, as far as Polkadot is concerned? Well, Polkadot is less directly enterprise targeted than Hyperledger or Ethereum, but companies like Bosch have launched a foundation using substrate chains, and KPMG ran a climate asset tokenization trial on Polkadot's technology. Centrifuge has partnerships with Maker, I think it's now called Sky, and asset originators in fintech. Another parachain, Equilibrium, is looking at on-chain forex and could incorporate tokenized fiat or CBDCs in the future. So in summary, Polkadot's ecosystem is carving out a niche where purpose-built chains for RWAs can thrive under its umbrella. Centrifuge is a clear leader here, bridging real-world loans into DeFi, and its success will bolster Polkadot's narrative in RWA. If more parachains specializing in real estate or trade finance emerge, Polkadot could become a whole tokenized asset network of networks. The DOT token plays a role within governance and cross-chain security, so broad adoption of RWA parachain can indirectly increase its utility. But so far, the DOT token has been suffering. It's performed poorly at this stage of the bull cycle, which I think indicates poor performance. Polkadot's focus on interoperability also means it could be the connective tissue between institutional blockchains and public DeFi for RWA. So that's on Polkadot. Let us know what you think about Polkadot's prospects when it comes to real-world asset tokenization. Moving on to the next and last one for episode 5 is Tezos, ticker symbol XTZ. Tezos, a self-amending blockchain popular in Europe for security tokens and experimentation. Tezos doesn't have a high DeFi TVL. We are talking of under $200 million typically, but it punches above its weight in security token adoption. Tezos was early to focus on on-chain governance, which appeals to enterprises looking for stability and upgradability and formal verification, of course. Notable RWA-related use cases on Tezos include Societe Generale, which chose Tezos to issue a 5 million structured product as a native security token back in April 2021. This was one of the first instances of a major bank issuing a financial instrument on a public blockchain. The token was a structured note or debt security registered on Tezos, demonstrating Tezos' suitability for regulated assets. And in 2022, Societe Generale's crypto arm also worked with MakerDAO to propose tokenizing euro-dominated covered bonds known as OFH tokens on Ethereum, but earlier they issued tokenized covered bonds on Tezos as well. Elevated Returns, a real estate fintech, planned tokenization of $1 billion in properties using Tezos. They had earlier tokenized St. Regis Aspen Resort as Aspen Coin on Ethereum. They migrated to Tezos, citing better governance and lower fees for issuance. This indicated confidence that Tezos could handle real estate token investor registries efficiently. Tezos is an ecosystem of tokenization platforms like Tonki or Tokni, though Tokni can issue on multiple chains, and was involved in pilot projects for CBDC trials with the French Central Bank, which tested a CBDC on Tezos for settling bonds. As for enterprise partnerships, Tezos is an active presence in France with backing from the French armies and vibrant developer community. Companies like EDF use Tezos for renewable energy credits, and Invesco ran a tokenized fund trial on Tezos technology. The Tezos Foundation also worked with Dubai's DIFC on tokenization initiatives. Technical features such as on-chain governance, which eliminated hard forks, and institutional-grade smart contract languages, you're talking of Microsoft, which allows formal verification, are pluses for cautious enterprise deployment. So while Tezos is not the volume leader, it is well positioned in the regulated token market, especially in Europe. Its early success with real securities gives it credibility. If EU companies prefer not to use Ethereum for compliance reasons, Tezos could be their go-to public blockchain. Recent developments includes onboarding of asset managers. I know there were talks of tokenized ETFs on Tezos. I don't know how far that went. The XTZ token or coin could benefit if usage grows, but much of these enterprise use cases don't necessarily require spending a lot of XTZ or XTZ. Often the issuers run their own nodes and fees are low. Nonetheless, being home to even a handful of marquee tokenized assets like national bond or major real estate portfolio could boost Tezos standing within the RWA space. So that's on Tezos. Any thoughts, guys? Let us know what you think about Tezos' prospects within the RWA space. And of the 3 projects we featured in this video, episode 5 on RWA tokenization on the blockchain, we featured Tezos, Avalanche, and Polkadot. Which of these 3 do you think is going to be a big winner when it comes to RWAs for the provision of infrastructure? You're talking of the picks and shuttles. Let us know in the comment section, guys. Until the next one, FD for self-amending.tv signing out for now. Bye.